Good morning, market snappers. Welcome back. This is Jesse. We're getting started right at 9 a.m. Pacific Standard Time, right on the dot as usual. Woo, what a manic Monday. What a crazy weekend we saw with crypto and Bitcoin and futures and all that stuff. Bitcoin dropped to 74,500-ish over the weekend and created this new CME gap here at 81,300-ish, very close to that. 275 is what I have over here. Probably depends on what exchange. Well, it's Bitcoin futures, so close to 81,275-ish. But on the first half of the live stream, we will cover Bitcoin, altcoins, stocks, anything that jumps out of us on the watch list. And on the second half of the live stream, we will cover your chart requests. So make sure to put in the ticker symbol, all the details, the asset name, the asset type, so that we can keep the live streaming. If you're new to the live stream, awesome. Welcome. If you're returning to the live stream, even better. Good to see you back on here. And we'll get rocking and rolling here. They're usually about an hour. Sometimes we go hour and a half. Sometimes we go 2 hours. But we've been covering Bitcoin the whole way down. Eric Hugh Edits. What's up? Good morning. Good morning. Good morning. Good morning. Gert Jan Tenhove 8417. Welcome back, Gert. Welcome back. Mighty Kirk. What's up? What's up? What's up? Good morning. Good morning. Good morning. Market Sniper in the house. Woo, can see you on here. So we're gonna get into all of that. So after just a quick recap on Bitcoin, right? I mean, quick. We're gonna be recapping it probably for about 30 to 45 minutes, but we're gonna get all into it. I don't know. IDK. I don't know. Networks available. Okay, yeah, we'll take a look at it later. Stay tuned. But here we are. I posted yesterday that Bitcoin is about 40. It was dropping and it was like, probably have to get on here. Let's go like this. Just so we don't get distracted yet. All right. Distracted with all my chart drawings. But Bitcoin is down wick to wick 41%. And I posted this yesterday, right? 74,560, depending on what exchange you're looking at. This exchange is Coinbase. But we were only 22% away from the 200-week moving average. And the main thesis was when I put out the bear market chart with all the targets on October 10th, the main thesis was that the top was in and that we would start a bear market and we would see price retest the 200-week moving average. This is the SMA, by the way. I always just say the moving average, but it's actually the SMA. And that's at 57,943. It's a moving average. It's very slow moving. And when I posted that original chart, it was at 54,000. So now it's up to almost $58,000. But the thesis was, rather than making a new all-time high, I thought we'd come down and retest here. Do we have targets lower? Yes. Do we have the fourth target, which is near the 200? Yes. Do we have the fifth target that's closer to like $40,000? Yes. Will it hit target 5? I don't know. I don't have a magic crystal ball. If we start closing below the 200-week moving average and the fourth target, then the probabilities will increase of target 5, but we will take it level by level and not get ahead of ourselves. But the reason why the fifth target is on there is because in 2022, Bitcoin hit the fifth target in 2022. And Bitcoin went 30% below the 200-week moving average. Will it do that again? We don't know. But if it does hit 30% below and hits $40,000, similar to 2022, it would hit the fifth target. So we'll find out. MicroStrategy, and we're going to look at all the charts. I'm just doing a quick recap. MicroStrategy, which has been the canary in the coal mine, not only for 2021 bear market, several times to the upside when it made a new all-time high and Bitcoin was at 65,000 still. And we were talking about Bitcoin going to make a new all-time high. So it was a canary in the coal mine to the upside as well. And then we were talking about MicroStrategy has been in a bear market since end of 2024. It has gone into a bear market for much longer than Bitcoin does itself. And it was already in that. MicroStrategy was, say at what was that, like $350 at the time. And, it was looking like the Adam and Eve double top pattern as well. And we were putting a magnet that it would retest the 200-week moving average. It retested the 200-week moving average. So it already has done that. Does that make it a guarantee for Bitcoin to hit the 200-week moving average? No, it does not. That's one thing for sure, is there's never a guarantee. But the probabilities continue to stack more and more and more and more that we will see price retest the 200-week moving average. Price got very close to hitting longer-term target 3. So we'll cover all that today and more. Hopefully everyone had a good weekend. Hopefully you get to spend some time with the family and didn't just stare at the charts like crazy. Wifey took the baby out. Well, she's 19 months now, but I still call her my baby. She'll probably be my baby when she's like 25, right? I mean, it's possible, but we will just take it level by level, Money Kirk. Because if you expect $200,000 Bitcoin when it was in a bull market, you may miss the top. And if you're truly expecting $30,000 Bitcoin, and a lot of that is probably clicks too, like it's, 30,000 is a lot lower number than target 5. Could it? Sure. It could go to 25,000. It could go to 15,000. Could go to 10,000. I don't know. Could it go to 0? I don't believe so. I don't believe it's going to go to 0. I'm looking to buy the right dip. Everyone's, likes to start saying like, I'm a perma bear and perma bear. No, I'm not. I was a perma bull in the bull market from January 4th, 2023, right? Starting the bull market. And the whole entire time, 2022 bear market, I was talking about buy the right dip, buy the right dip. And so we bought the right dip. We bought it. We bought the right dip. So I don't know. Okay. Mike's good. Yep. All right. So here we go. That's the whole purpose of this, is to buy the right dip. I don't think Bitcoin's dead. I don't think Bitcoin goes to 0. I think they built too much infrastructure on it. I think there's too much potential money to be made. But does that mean that the bigger players who got in a little bit later couldn't suppress price and push it down even further than what target 5 is? It's possible. So I will wait to buy the right dip. I'm not just buying at target 3. I'm not just buying at target 4. I'm not just buying at the 200-week moving average. I'm not just buying at target 5, right? Although historically, buying at or below the 200-week moving average has proven to be a good time to buy. And I've said in the past that dollar cost averaging below the 200-week moving average has proven to be a much better strategy than dollar cost averaging all the way down in a bear market. Makes no sense to me whatsoever. But there's always that one thing that always stays in the back of my mind. It could always go lower than what we think. And this time could be different as far as what I mentioned in 2022. It was possible. It didn't happen, but it was possible. And so we stayed neutral. If capital IF, if Bitcoin witnesses a .com like bubble crash or 2008 like crash, then I could see Bitcoin dropping much, much farther than target 5, right? So I will be looking to buy the right dip. And what does that look like? Well, similar to the top. There was bearish divergence at the top again. There was bearish divergence November 2021 at the top. There was bullish divergence at the bottom of 2022. From November to December, there was bullish divergence. And we were ready for it. And we were talking about it. And we were ready. And we were ready. And we were ready and ready. And we waited patiently and waited patiently. And through all the patience of letting it bottom out, put in bullish divergence, looking like a higher low back in December 2022. Then I pulled the trigger January 4th, 2023. Guess what? It was still at 16,800. I'm not worried about buying the right dip. I'm not worried about Bitcoin going to $400,000 without me. I'm not worried about it. It takes time for the ship to get turned around. The higher time frames have flipped bearish, right? So if you go to the weekly chart, flipped bearish back up here, the week of October 13th, battled the trending dots for a little bit, and then had another sell signal on the weekly chart. The week of November 3rd, trading dots started to roll over. It's been bearish ever since. The 2-week chart, bearish engulfing candle, bearish engulfing candle, bearish divergence longer term, sell signal on the week of November 10th, red trading dots. The red trading dots and sell signal below has not happened since 2022, right? Since 2022. 3-week chart. I pointed this out all over X posts. Before, when it was even down here, and then it pushed back up and closed up here. I was talking about it in the week of October 6th. Bearish engulfing candle on the 3-week chart. Talked about it here. Even if it was not the top, but another local top, price still pushed down lower into the trailing dots, right? Still pushed down lower. But if it was similar to November 2021 or December 2021, bearish engulfing candle on the 3-week chart, price did come back down the 200-week moving average. So then we saw a candle close below the trailing dots at the end of October. That didn't happen on the local top. It happened this time, right? So bearish divergence. Candle close below the trending dots. Bearish engulfing candle on the 3-week chart. The trending dots are now red. If you can see that, right? 2 red trending dots in a row. The trend has changed. 2 red trending dots in a row. And price is getting closer and closer to the 200-week moving average. Go to the monthly chart. Why do we look at the monthly chart? It's so lagging, Jesse. It's so lagging. The reason why is to confirm the overall trend. So you got shorter time frames, whether it's a 4-hour chart, London, UK, not so sexy news, aka Lawrence. What's up, Lawrence? Welcome back. Thank you for always posting, reposting, restreaming, commenting on both apps, the X and YouTube app. I appreciate that, Lawrence. That's awesome. Appreciate it. Ivan the Great, good morning. Good morning. Good morning. Good morning. Good morning, snipers. Yes. Yes. The monthly chart. What's interesting, and I posted this the other day, was that Yes, the wick pushed higher to 126, almost 500, right? But the monthly close ended at the highest ever, 115,800 ish, right? So that was the highest back in July, monthly close. Wick, wick, 3 months in a row of wicks higher, but the highest was in July. So that was interesting to note. The monthly chart came back and retested the trailing dots. That didn't happen at the local top. That didn't happen at the local top. That didn't happen back here in June 2021. It did happen in January 2022, right? Then we saw a sell signal much later, May 2022. We just printed a sell signal on the monthly chart below the trending dots. And you can see the monthly chart was still a green trending dot at the time because the monthly chart is really lagging, right? So a sell signal below the green trending dot. There's another one. And then most likely the next one will be red. And the next one will be red. And price could be back down here at the 200-week moving average. So it's a bear market. These higher time frames are confirming the overall trend, right? Confirming the overall trend. If we look at RSI monthly chart, bearish divergence, a lower high, September 2025. So the monthly chart put in a lower high. No, wait, that's probably additional bearish divergence. Nope, that was a lower high. Okay. I was just double check. Just double check. All right. So bearish divergence, relative strength is leaving the building even though prices are going higher on the closes. But then, even though it wicked higher, the close was lower on price and relative strength, signaling that the top was in or was going to be in. And even though it continued to wick higher until October, then it broke down and started closing back below. And that's when we start to see a 41% correction, right? And you could see, for example, the long-term trend, right? So if you've got bearish divergence, and then a lower high, the trend has been broken. And it was battling the trend all the way back here, right? So go to the MACD, right? We were pointing this out. There was bearish divergence on the histogram. The histogram was decreasing. And then in January 2022, there was a bearish crossover. The histogram was increasing. And then there was a bullish crossover in June 2023. So again, the monthly chart is lagging. Bearish divergence on the histogram. Crossover in November 2025. And the momentum is to the downside. The long-term momentum is to the downside. And you can see that while the momentum is to the downside, it took time before I even took a first buy, right? You can see December 22nd here. The histogram was increasing, and then January 4th is when it was go time. So I still remain patient. Why? Because the histogram could just come back down, right? So it's not the only reason for buying. It's not the only reason for buying. And you can see back over here, September, it started to go the opposite direction, and November made a new low, right? So even though the histogram starts to go like this, that's not the reason. I'm still waiting for a higher probability of a reversal, but still outperform the MACD, right? Still outperform. So here we are. You got 4 red histograms. You got 1, 2, 3, 4, 5, 6, 7, 8, and then 9, 10, 11, right? So still have some time. If you did, for example, red, here, let's make this red. Red, red. What is it? How many do we have? 3, 4, 8, right? 4, 5, 6. So if it were to play out something similar, right? And then Jesse, your drawing is amazing. Thank you. Thank you. And then it starts to go like this, right? And price could still be going lower. Price could still be going lower. But I mean, sooner than this, because I think, if the bear market lasts till October, right? So, but this is just like, obviously, none of this is financial advice. Obviously, it's for educational purposes only, and hopefully, you have a little bit of fun along the way, like making fun of my doodle, my drawing doodles, right? So, the point is, you can see the bearish momentum, and even if the bearish momentum starts to fade, price could still go lower. You can see it's still decreasing, right? But it's giving us early warning signs of a possible reversal. And this takes 3, 4 months to play out, right? So if November was the low, pretty sure it was, you still had December, you still had January. And before November was, say the bottom, we had some warning signs that it could start reversing back around. So I'm not worried about buying the right dip. So we'll see what happens. We're gonna try to stay as neutral as possible, and everyone's talking about the bear market now. Well, a lot of people say, or I see comments or posts that, well, everyone's talking about the bear market now, so it'll probably go back up. No, it's just that they're really late. They're just really late because we've been talking about it since October. We talked about the warning signs back in September, and they're just really late. So now we're getting closer to like if you look at the Wall Street cheat sheet, movie bot, what's good? What's good? What's good? Uh if you look at the Wall Street cheat sheet, we're probably somewhere around anger and then getting closer to capitulation. Once price is coming down, you know, down to here where getting closer and closer to say the 200-week moving average, we're probably in capitulation mode, right? And then that's when the buy the dip bros become dollar cost average bros. So even though they were talking about dollar cost averaging or buying the dip all the way down, they changed their tune from instead of buy the dip, dollar cost average. Because what happens is all the people, all the reply people in their posts get so angry and mad at them that they change what they start saying to try to, ease the masses of being mad, right? So, uh let's get back to the daily chart, back to the flow, the real flow, the swing trader flow. So, going back to we've been watching it. We've been watching it. We've been watching it. We talked about back here the relief rally, and we only got like a 21% relief rally. But we talked about this whole entire time. We expect a relief rally. We talked about it on the live streams. This target here is the bull trap. It was the same 2 targets within this box that trapped the bulls March/April 2022. It hit the exact same 2 targets. And that's what we had out even before, like, back in here is when I drew that box out. Both targets were hit. And then it started to get rejected. And then started to come back down. And then the sell signal closed below the trailing dots. Sell signal closed below the upward trend line. Back test, came back down. Push back up, back tested one more time. And now it's come all the way back down, right? This could be, at the end of the day, a bullish engulfing candle. That doesn't mean it's the bottom, but it could mean that it's a local bottom, meaning that it could let the trending dots catch up before the next move lower. It could let the moving averages catch up before the next move lower. So it is possible, right? This blue line, I believe, is weekly support. Already had daily candle closes below it. It might spend a few days here bouncing up and down. Who knows? Let the dots catch up. So we'll see. We will see. Right? So what would that even look like? I don't know. It's too early to say, but it could, you know, bounce back up and down, let the train dots catch up, right? And then start coming back down. It's possible. That would fill the CME gap at 81,000. That would even retest that pivot point, right? So that pivot point there, we are doing a lot of speculating today, but that's what we do. Foresight is greater than hindsight, right? So, but before we finish my thought over here, and I probably regret this. I probably should finish my thought first, but we still have more to cover on Bitcoin. We're gonna cover the altcoins, the stocks, and then of course your chart requests as well. But before I finish this thought over here on this, we don't have any paid affiliates. We've never taken $1 of affiliate money, so we do plug our own Market Sniper Pro. We only have one plan. You can go to the website. You can find the website on my profile or Market Sniper Pro. You can find it over here, marketsniper.pro. You can find on my other account. So it's only $49 a month. We continue to roll out more and more and more tools, and there's just you just get so much for it. It is truly the most popular, and that's why we end up deciding to get rid of the $29 a month and the $9 a month, because only a couple of people are buying 29 and nobody was doing the $9. So we're just like, what's the point? Let's just not clutter it. Let's just do the $49 and we'll throw everything on it. Everything. And I continue to get arbitrage for my own subscribers who are paying $79 a month for recorded coaching and a couple of indicators and Discord access. They're getting a lot more now. And most of them have converted from the 79 to the $49. And it's just a process. We're trying to help convert everybody over. But so they're arbitraging me. That's great to see. Happy they can save $30 a month. And then some of them arbitrage me even more. And, it comes out to like $40 a month annually, and it renews every year, right? So just be aware of that. But most people stick around because the price is so low, right? Like I'm not charging $199. Like even AI says to charge 199 for everything that we've rolled out. But we're at $48. And one day the prices will probably go up, right? So I keep saying that, but I'm not ready to increase it yet. I'm still letting people out. But what you get for that, you get the whole portal. We're building it out step by step. You get the dashboard, journal, portfolio, strategies. You've got the screener, signal alerts coming soon. It's just for me and the admin right now, but all that. But if you're looking for example, bearish setups, you could do RSI bearish versions, RSI crossing below. You could add filters like MACD divergence, but then go bearish, right? And you would see, you know, say 27 results show up. You can click on it and it shows the chart, right? And you can push it through your trading view, open chart, all that stuff. So a lot of things coming down the pipeline. Uh, it's going to give a score value of the probability of that working out in your favor. You know, it's going to be 0 to 100. And so the higher the number, the more likely it is to go in the favor that you're looking at, whether it's bearish or bullish, right? And you would just switch this from bearish to bullish. You switch this to bearish to bullish, and you would do, say, 49 crossing up, right? And then now you just flip from bearish to bullish, and then it comes over here. So, building in the charts. I don't think we released that yet. Setups, community tab where I'm posting there. We're still posting in the Discord as well because we're going to use it as a bridge. But you get all the recorded coaching videos. And then eventually we're going to roll out the AI too. So when you're in the screener looking for opportunities, it will be able to give you analysis right there. And the three most harmful addictions are heroin, carbohydrates, and a monthly salary. Okay. So I don't know where we got some of these quotes from, but that's an interesting one. Uh, a monthly salary. Oof, oof, that hurts. That cuts deep. So, anyways, we've got a daily quote. Most of them are trades related, but you know we run out of trading quotes too. So, but that's it. Market Sniper Pro. There you go. Check it out. Yeah, Apple and Netflix. Well, I have Pandora and I use my buddy's Netflix. But in our defense, he's on our YouTube TV, so we pay more. But I'm on his Netflix. So we've packaged together, right? Save money. Save money. That's how you keep your money is you save money. It could put yeah, cool. But yeah, so back to my thought. It could be a bullish engulfing candle. Could let the trending dots catch up, right? It's getting pretty far extended away from the trending dots on the daily chart. So if that's the trending dots trajectory, right? Kind of zoom in here. You can see this a little bit better. It was getting oversold. You can see the blue candles. It was getting oversold on the blue candles. And then possible bullish engulfing candle, oversold, bullish engulfing candle, and then price came back to the trending dots. So at that moment, the trending dots were way up here, right? And then here, and then that bullish engulfing candle here, and then just took a handful more of days for the trending dots to come down. So 1, 2, 3, 4, 5, 6. So probably somewhere around in here could play out very, very similar to here. So if you look at this, here, just say here like that, right? So if that's the bullish engulfing candle, I mean, it looks pretty close. I didn't even have that planned. But when you just see the chart, when you obsess with the chart so much, and uh do I think it takes that long? Probably not. Could it? Yes. Uh but probably when the higher time frames become more bearish, uh and this maybe even retest that blue line, right? But you can see that, today, tomorrow, the next day, the day after, comes back down, pushes back up, and then you're looking at like almost mid-February, trap some more bulls. The bottom is in again. The bottom was in. The bottom is in again, right? The bottom was in. The bottom was in. The bottom was in. You literally heard them say this the whole entire way. Trust me, we all did. Bottom is in, right? Bottom was in. Bottom was in. Bottom is definitely in. uh, and now you're gonna hear it again, right? It's just the same. You probably hear it less, but you're gonna still hear the bottom is in. And technically, I could say, if we get this bullish engulfing candle and it plays out similarly, fill that 81,300 ish gap in the next couple of days, CME gap, and then possibly over the next week or two, maybe even retest 84,000 because that was the former pivot point, and we didn't really see too much time spent. It just got crushed straight down. So it kind of makes sense to come all the way back up, back test it. That support, 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 support is now resistance, right? Support, 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 broke through support. See if it comes back. Maybe retest it. Maybe it's just going to fill the gap 81,300. So let the trending dots, let the moving averages catch up. And then I'm obviously with all the higher time frames still bearish. We are still expecting all bounces to get sold off, right? So this would be a wick to wick bounce of, let's see, from here to 81,300, 9% bounce. If it came back for a retest of that former support, it's about a 13% bounce. Kind of makes sense. Could it spike above? Sure. Sure, it could. Could spike back above. It would trap more bulls because we've gained support, right? But the higher time frame momentum is bearish, and that's where all the price action guys miss out. The price action guys only miss out because they're only looking at support, but they're not looking at the overall momentum to the downside or the overall momentum to the upside in a bull market, right? So that's the clear difference. Even though we expected a bounce and a relief rally, and we talked about that the previous relief rally of 2022 was like 63 or 64 days. I don't know. I posted about it. 63 days. This one lasted, 54 days? The relief rally from down here? 54 days and hit the same target and then started to roll over, right? So you can see it flashing from ultra bearish to just bearish, is battling right now, and we still have a lot of time left in the day. So this still lines up with the overall momentum to the downside. So whether that's the 81,300 CME gap that we covered earlier, or pushes all the way back up to retest the pivot point that broke down. We're still expecting any bounce to be sold off. And maybe it creates like this bear flag, right? And it's already in a bear flag if you look at the weekly chart. So it's going to get very. So if you got this big, large pull here with a flag on the weekly chart, had a bearish engulfing candle, I pointed that out, and then price momentum went to the downside, right? We got a candle close over here on the weekly chart. That signals further downside, whether it's today, whether it's tomorrow, or February 11th, like we just speculated. It still signals for the downside. The bear flag target would bring it down to 54,000. We have the 3-month support lining up with the 200 moving average. You get the 6-month support down here at 46,000. You got the head and shoulders target down here at 49,000. And of course, we have target 5 down here at 40,000. So there's a lot of reasons why. What else? Let's take a look at the chart that we drew out on October 10th. So this was the 2022 fractal. And took out this pivot point over here, right? So weekly close below this pivot point. We talked about it on XRP. We talked about it on MicroStrategy. When MicroStrategy took out this pivot point here with the weekly close, it was just a matter of time before it retested the 200-week moving average. And it did. And it did. It already did. So we'll take a look at that. You can see zoomed out, you got the target 5. You got another reason here at the blue line, 38. I forget what that one is. Probably could look at it. What else? What else? What else? What else? Timing wise, it almost hit target 3, hit target 2 way back here. Got within. Let's see, this would have put it at 73,000. In the middle of it would be like 71,285. Got very close, right? So support, close below support. That is not bullish. That is not bullish. HODL gapped down. So there's a new gap. And if you look at it, HODL's got these ETFs just have so many gaps. It's insane. I can't even keep up with all the gaps. Look at all the gaps that got filled, right? Remember we talked about this on the live streams. There's a head and shoulders pattern, sell signal, right? All these gaps got filled. We talked about if it's filling this gap here, Bitcoin is probably at $67,000 or $70,000, right around that range. Assuming that gap gets filled, Bitcoin would be at about $70,000. So the $81,300 CME gap is similar to the $23.15 VanEck Bitcoin ETF HODL, right? There's a lot of reasons for the ETFs to come back down here. It's possible the ETFs come back down here and retest the all-time low. There's even a gap at 1253. Will it? We don't know for sure, but if it does, I think that's where the blue line is on the other chart is January. Is that right? January 23rd, 2024. Yes, that's where it was. So 38,000 roughly. Yep. I got so many charts. It's hard to remember. I'm doing my best to remember them all. But I'm getting older. Yeah. So If Bitcoin, if HODL comes back to retest the all-time low from January 23, Bitcoin would be at $38,000. So there's several reasons why Bitcoin could see those lower prices. There's gaps all the way down to like 11. There's another gap here. Like I said, I can't keep up with all the gaps on HODL. And so they're not big gaps, right? But when you add up a million gaps, they become bigger gaps, in my opinion. Like this one was filled. Can't keep up with them all. There's just so many gaps on these ETFs. It's wild. It seems like it wants to come back and retest it. It seems like it. We don't know if it will or not. We'll take it level by level. But what we do know is it's filled all these gaps so far. This gap seems like it really wants to be filled. These gaps probably get filled. Will it fill this gap first? Possibly. We just talked about it, right? We just talked about it. We just covered it. Is there a gap here too? $26. See, I can't even keep up with all the gaps. There's so many gaps. uh, yeah, there's a gap at 26. So, and that might not get filled until the next bull run, right? The next bull run. So, if you remember, there were two big gap. Were they that big? I don't know. There were two gaps that I had pointed out in 2022 on Bitcoin to the downside, and that happened to be one of the first major targets of. There's a $28,000 CME gap. So when I was buying the breakout at 16,800 on Bitcoin, there was a CME gap in 2022 that was left open, right? So just to kind of show you where that it took a while to fill it, right? So you had this one right here. 28,700 was one of the first targets. So buying back here on what was it, January 4th, right? January 4th, buying back over here, we had this target up here, right? We had the 200-week moving average as a point of interest. Created this gap here, came back, filled it quickly, right? And then took off to the upside. So had that one. We had this one here. They're not large, so the market bosses probably didn't feel like it needed to be filled right away. But in hindsight, both of those were filled, right? Both of those were filled. And that was it for the gaps. So we had two CME gaps, and this one was on the chart at the January lows. So had this one marked out, it filled that gap. So there we are. Then filled this gap at 35,000. It wasn't until October 2023. That gap was created May 2022, a year and a half. So like I always say, not all gaps get filled, but they do work great as targets. So remove those because those have already been filled. Let's see. That one's been filled. Filled again. That one's been filled. Right. So that's where we're at on the CME gap. Bitcoin versus gold. I was just having some fun yesterday, and I posted Bitcoin has crashed to 63,000, but I didn't say if it was dollar or not, and people were losing their mind. Right? Bitcoin's crashed to 63,000, and they're like, "What?" Sometimes you got to have a little bit of fun. Um, Market cap dropped all the way down to 1.5 trillion. Bear flag and the 200-week moving average to bring it down to a $1 trillion asset, right? So, ooh, we will see. We will see. So let's switch gears. Let's look at some of these altcoins. Ethereum dropped hard. Ethereum. So I was pointing out on the monthly chart that Ethereum never made a higher high on the monthly chart with a candle close. Obviously, it did make a higher high on the weekly chart, probably in the daily chart, and like a wick higher. Oh, we got some alarm going off out there. Anywho, Ethereum is back below the 200-week moving average. And what did we talk about? We said it's not bullish if the 200-week moving average starts to go in a downward slope. It's in a downward slope. So is that 2485 here? So you can follow along, right? It was at 2486. It's currently at 2451. It started downward sloping. And we talked about the first time in Bitcoin's history that it started downward sloping against gold. You wouldn't want to see Bitcoin 200-week moving average downward sloping against the dollar. You would not want to see that. XRP. Yeah, it's possible. It's possible. I haven't mapped it all out, but not as much as I have with Bitcoin. But if Bitcoin drops, if Bitcoin anytime, if Bitcoin drops 50%, Ethereum's dropping more. If Ethereum's dropping more, other altcoins are dropping even more. So here's the weekly chart that we talked about on XRP, and it lost it, closed below it here, closed below it here, and this is follow through to the downside. So maybe it's on this one. There it is. So that's the pivot point I was talking about. Below, below, below. What else? Chainlink. Downward sloping 200-week moving average is not bullish. Cardano. Downward sloping 200-week moving average is not bullish. How long has it been in a bear market? You ask, 1,610 days, roughly 230 weeks, right? How many years is that? A long time. August 2021. So 4.5 years. 4.5 year bear market. Crazy. Down. You don't want to see Bitcoin against the dollar get into a 200-week moving average a downward sloping 200-week moving average. You don't want to see that. So if you're a hodler, right? If you're a hodler, if you took profits or you got out at a higher price, then you probably don't mind seeing it. You wouldn't want, I mean, you still want to see another bull run. You want to see market fly. It's much more fun and you can make more money. But to buy the right dip, right, we'll have to keep an eye on it. If it's downward sloping 200-week moving average, I'm not going to be as optimistic as the last bull run of January 2023. So we will keep an eye on it. Bitcoin versus gold, already downward sloping. Ethereum, all the altcoins, downward sloping 200-week moving average. If Bitcoin against the dollar goes downward sloping, that's not bullish. That is not bullish. Also, Bitcoin versus gold, you see it's well below the 200-week moving average. You could see that on the monthly chart, its relative strength has never been this bearish on Bitcoin versus gold. Currently at 38, it was down to like 37.25 over the weekend. But we just saw a close at 38. What was it? 38.57. Close at 38.57 on relative strength monthly chart for the first time ever. So that's not bullish. Could it be towards the bottom on Bitcoin versus gold? Maybe, right? But based off of this crazy idea that of this pattern where it took 48 months to bottom and then 47 months to bottom, and it lines up with price bottoming. And then if it took 46 months, which lines up with our other October, right? That lines up too. If that is possible, then, and it's more bearish than it has in the past with relative strength against the gold, then, it doesn't seem like the bottom's in, right? In fact, it would mean that we have, sideways slash downward momentum for 8 or 9 more months, right? So where will relative strength be against gold at that point? We don't know. But there are still similarities of this chart to the dollar versus Bitcoin versus the dollar. So had the bearish divergence decreasing, right? Let's see if we can find one with more chart history. Probably do it like that, right? So similarities, right? So that's what we're continuing to watch. We'll see. We'll keep an eye on it. You don't want to see, if you're a perma bull and you're just going to hodl through it all, you don't want to see a downward sloping 200-week moving average. It's starting to flatten out now, but you don't want to see it go. It's never been downward sloping in the history of Bitcoin, and you wouldn't want to see it downward sloping. Bitcoin versus gold has never been downward sloping on the 200-week moving average, and in the history of Bitcoin versus gold, it never has, and now it is. So you don't want to see it. Trust me. But we just show you what we see versus what, hopium or copium, downward sloping, right? Downward sloping on near. Another example, downward sloping. MicroStrategy. This is the weekly chart. No, monthly chart. Let's get on the weekly chart. There we go. The Adam and Eve double top pattern, the canary in the coal mine, right? Broke here. Closed below this pivot point, similar to Bitcoin just did. Bitcoin just closed below the similar pivot point. That was November 2025. And then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks later, retested the 200-week moving average. So will that happen again? Will it take 12 weeks? Maybe not. Probably not. Probably, I don't know. It's hard to say. 3 to 5 weeks, maybe. I don't know. It's hard to say. I don't have a magic crystal ball. But the canary in the coal mine did tell us on the bearish engulfing candle on the daily chart, was the top in? I put question mark on that day. In hindsight, the top was in. And we changed it from a question mark to the top was in. And then we got the Adam and Eve double top pattern, longer term play. close below it, and we could possibly see prices back below $100. This was the confirmation line, right? Breakout to the downside. We didn't put this on in hindsight though. I showed this Adam and Eve double top pattern over here. So that was back in October. There was a bearish engulfing candle, and I was like, "Oh, this looks like a pattern I've seen before, right?" So we'll see how it plays out. That's MicroStrategy, or continues to play out, right? Nasdaq sell signal followed by pumping all the way back up, right? Sell signal on Friday dropped almost 2% today, and then pumping all the way back up. So it's hard to kill a bull. It's hard to kill a bull. 3% move. So the retracement overall, though, it dropped 4.4%, and now it's pumping back up 3%. So similar idea, but on a daily chart versus a weekly chart. If this is an Adam and Eve double top pattern, kind of looks like it. If you see it breaking below this line here, you can see lower prices. SP 500, gold. We put this fractal out on gold back here at the top. It's possible after that big flush, it finds support. Like these are just showing closes, not wicks. A couple of days ago, I think it was on Friday or Thursday, we put this out. And then, of course, it's closing back below. But it could be another buy the dip scenario, right? So I know a lot of people are calling it again. They were calling it back. The same people who are calling the top on gold over here. And I said, I don't know. I think it's still buy the dip scenario. Are now calling the top again. You see it all over Twitter. I'm not sure if it really matters, but yeah, I am. I'm always, I wouldn't say always, but I never have more than like 3 trades going. But I usually always have at least one going on. But yeah, absolutely. For sure. For sure. But I'm never going to tell you the broker, the exchange, whatever. I don't want to be targeted. So anywho, yep. So I don't know. There's a sell signal below the train dots. There's a sell signal below the train dots. I'm not sure why it matters. Not sure why it matters. But you can ask, yeah. So here we are, right? Is this going to be another buy the dip scenario? So I drew the trend lines similarly, put the same fractal on as over here. And why could it be another buy the dip scenario? Why could it be future bearish divergence, right? We'd have to look at when I drew this out as a potential, and it might not be, right? But why could it be? It's because at the time when I drew all this out, the higher time frames were bullish. So we will take a look at the higher time frames to see if that thesis still remains, right? So over here, I was like, I think it's too early to call a top, and I definitely wouldn't be shorting, right? It's still buy the dip season. Now we're going to take a look at it, see if it's still if I still think it looks like a buy the dip season, right? So over here, it was still looking like buy the dip season. once it unfolds. So let's go to the weekly chart. Very wicky. There is a sell signal on the daily chart below the trading dots, but it was still above the green trading dots, right? So that's still the same. Could it change? Yes. These are lagging, right? But also a reason why it may not just come all the way back down here by tomorrow. Could it? Sure. The 2-week chart, there was a daily sell signal below the trading dots over here. We're talking about buy the dip scenario. There's a daily sell signal below the trading dots over here, still well above, or was it over here? No, it was over here. Sorry. Uh, Still well above the trading dots. Still ultra bullish. Still ultra bullish. There's no bearish divergence yet. One thing is different though is could start seeing signs because if gold 2-week chart closed below here, you know, it might start putting in a topping pattern, which could take time to play out. Let's go to the weekly chart. Weekly chart has bearish divergence, could start closing lower and lower. So, like I said, it could start like some sort of topping pattern with additional bearish divergence, right? So, what if there's more bearish divergence? And so price keeps going higher. So if there's additional, say it comes back for a retest and then pushes up higher, and there's additional bearish divergence where the lower highs are still happening on relative strength, and we see price pushing up higher, even if it's just a little bit, that's a possibility, right? So on the weekly chart, it could start forming, you know, divergences and stuff like that. But still an uptrend. 3-week chart has a pending RSI sell signal. So when that has happened in the past, prices come back to the trending dots. Doesn't mean that bull run is over on higher time frames, but there is a pending RSI sell signal for early warnings. Again, could go sideways and or create higher wicks on the higher time frames and then push down. Monthly chart hit 95. Last time it went that high was the 70s and 80s. And I've already pointed that out before. So, and you can see like going all the way back, going all the way back. Here, there's bearish divergence on the monthly chart. Bearish divergence on the monthly chart, and price kept. So after price came back to the, here we go. So this is what is possible. If gold is putting in on the monthly chart, and this takes time to play out. It's a monthly chart, right? The top is in, Okay. For a couple of months, right? And then pushes it back up higher, makes a new high, but makes a lower low. Comes back down, top is in, pushes up again, puts in bearish divergence. Mike's still good? Yep. bearish divergence, right? But then starts putting in a lower high, then retest the trailing dots, then retest the 200 moving average, and then makes it another big run. So it's possible. It's possible it's going to do that now. So here, let me just hit this. On the monthly chart, if it were to play out similarly, comes back, pushes higher. On the monthly chart, comes back, pushes higher. Right? And then comes back. And that would be the divergence, similar to the 70s. And then it had one more big run up till 1980, right? And it would look like this, where it comes back, pushes up, lower high, comes back, pushes up, and then comes down. And that would be your bearish divergence. That would be similar to the 70s if it were to play out similar. So that's what I mean when the higher time frames are ultra bullish. We still have to think it's buy the dip season, right? It was ultra bullish, and many were calling for, because the daily chart had a sell signal below the trailing dots, the top is in. But it's ultra bullish on the monthly chart. And then there could be divergence on the monthly chart similar to the 70s, which means, yes, a big correction. Yes, another pump up. Yes, another big correction. One more last pump up, not as big. And then you see the relative strength decreasing. So we'll see. We'll see. Just speculating over here a lot. Same thing, monthly chart, silver, wild swings, right? Wild swings. Maybe it puts in bearish divergence. Takes time to play out. Another one last push. And then maybe that's it after that. I don't know. And it consolidates longer. However it does. And then maybe another run. So comes back down, right? Follows, pumps up, creates that wick, but closes higher. And then who knows? I don't know. We're full on speculating. And then maybe that run is just craziness, right? Maybe it's a couple of years. And then it just goes crazy. I don't know. We showed that fractal before. So what else? The dollar. Let's go on the daily chart. Coming back into the trailing dots. We talked about it. It was getting oversold. The tiny gap here, like a miniature gap. And however it plays out, if it does consolidate, comes back up, comes back down, up, down, and then maybe breaks out later. It's possible. But right now, it just seems like it wants to come back, retest trailing dots. We talked about it over here. What else? Hive. Downward sloping 200 moving average. Hit one target. Didn't hit. Was it two targets or one target? One target. Downward sloping. Still hit one longer term target. And that was it. Right back down. So downward sloping. Upward sloping. So it was downward sloping. And now it's and then it came up a hit. Was 4 out of 4 targets to the upside. So trade each chart individually. Downward sloping, still hit a longer term target. Coin couldn't even get back up into this target area. Just hit that sell signal and then just straight back down to the 200, right? So April 2025. Platinum. I better not be on. Okay, good. Uranium, copper. Okay, let's see. Magnificent Seven. Get some bounces. Microsoft back in the target 4. Tesla. Meta. Got that new gap there. Nvidia bouncing. Netflix. Mm-hmm. SMCI. So this is potentially a higher probability of a better bounce on SMCI example, right? So we always talk about this, that the higher low is the higher probability. Why? Because there could be additional. So you got bullish divergence, and then there's additional bullish divergence. Then the higher low is the higher probability. So could see a bounce incoming on SMCI, bullish engulfing candle, higher low. Let's go. Let's see. Bullish divergence, higher low. Right? 200-week moving average, 34. Got some smaller gaps up here. But you could get there's a big move to the downside, right? Big move. So it's a 52% correction lasting about 117 days, right? So could see a bounce on SMCI in the near future. Trying to get back above the trending dots. The trending dots are green. Bullish engulfing candle. So, caution is it's below the 200. Trending dots is bearish on the weekly chart. Trending dots are at 36. 2-week chart could be bouncing back up to the 2-week chart, $40. It's bearish though, so just expecting a bounce as of now. $40 for the 3-week chart. Monthly chart is at 43. So there's a lot of reasons why I could retrace and retest all those trending dots. So will it? We don't know. But Possible. What else? PLTR. I don't think anything else jumps out of this. Bum, bum, bum. So that's where we're at right now. Bitcoin dropped to $74,000 and it I is 81,300 ish, right? So that's the CME gap. And like I said, we already talked about retesting this over here is as a possibility on daily chart. Will it? We don't know if it'll get that high or not. Trading dots are still up here at 90,000 on the Bitcoin futures. On Bitcoin futures, not the Bitcoin futures, but so it's possible, like I said, but I'm still expecting all the bounces to get sold off, however it plays out. Let's see. We got some requests. ZBCN. Are we over an hour? Oh my goodness. Let me just take a quick second before we get into the chart requests. Almost out of water. Oh, I'm going to be out of water. So ZBCN, I'm glad you put OKX because on Kraken it was saying something completely different, and there was no chart history. And so if there's not a lot of chart history, there's not a lot of value that I can add. This one still doesn't have a lot of chart history, uh, so I still can't add too much. But you got it's bearish on the daily chart. That was probably the top, right? So from wick to wick, 860%. And you know, it's been in a bear market since May 2025, down 69%. But the daily chart is bearish. The weekly chart is bearish. Downward trend since the top. 2-week chart below the train dots. It's just there's not enough chart history to look at even higher time frames. But yeah, I don't see, if you're bullish on this long term, right? Seems like it has some work to do. So downtrend until proven otherwise. Can't really add too much more value than that. What else? Any other? Ivan the Great, CVX on night. Yeah, sure. Sure. Stocks, CVX, Chevron. The Chevron near us always like $4.60. Like $80 to fill up yesterday. I was like, dang, she was thirsty. No wonder why they're going crazy. So, what we thought was even if it were to pull back, it's buy the dip season, right? So we were looking at Chevron. Whenever you asked me last, like if it was like breaking down or whatever, uh after the bearish divergence or whatever, um it looks like it's buy the dip season. So even if it came all the way back, we still expected it to go higher. And of course, it just remained bullish and ultra bullish on the daily chart. But the overall thought was it's in an uptrend, right? Ultra bullish on the daily chart. Weekly chart was ultra bullish on the weekly chart. It's above the 200. Took out this pivot point. Took out this pivot point. This one. This one. This one. There's only a couple pivot points remaining before Chevron could be in price discovery, right? So all-time high is at 189. That's not too far away. If we're gonna look at those long terms, log. It looks pretty bullish, right? It looks pretty bullish. That's a weekly chart. 2-week chart is bullish. Could be in price discovery and like it got within 6%, almost 7% of the former all-time high of November 2022. That's bullish. 3-week chart is bullish. Monthly chart is bullish. So expect pullbacks along the way. And, when you see those pullbacks along the way, those are buy the dip opportunities, but you can see the consolidation. right? $220. Or is it a long-term bull flag? Like, this is a monthly chart, right? But that would be crazy. Mm. If you take in the from the pole from here, then that flag's too big. So I don't know, but that looks more realistic, especially looking at the history. Definitely went through a long consolidation period though, and now it's breaking out of that. It broke out of it. So, woo! Is that it? Is that it? Okay, I think I covered them all. Let's take a look at Bitcoin one last time, wrap it up, see where we're at. Let's look at the Bitcoin futures. Pending sell signal on Bitcoin futures monthly chart. Well, we already had it on the other exchanges, right? May 2020. Huh. So it's lagging by a month on Bitcoin futures. Interesting. But yep, that's where we started. That's where we're going to leave it. And wick down to below $75,000, left a CME gap at about 81,300. And we talked about letting the trending dots and the moving averages possibly catch up, possibly come back and retest what was former support. Has now flipped into resistance on the daily chart. So it's possible to come back up and see a retest of that. Boom, boom, boom. And then, another breakdown similar to this breakdown over here, drawn out, mapped out, played out, and that's it. So, with that, hope you have a good rest of your day. Thank you for smashing the like button. Thank you for hitting the repost button, sharing with your friends and family. I appreciate all of you. With that, we will continue to sniper the markets together. And we'll see you on tomorrow's live stream on Taco Tuesday. And goodbye. Adios.